Mercedes just lost 9% of its global sales in a single year. 9% gone in 12 months at a company that has spent more than a century building its name on stability, engineering pride, and the quiet assumption that a three-pointed star on the hood means something permanent. And here's the part that should stop you cold. Instead of pulling back, instead of playing it safe, instead of quietly trimming a few models and waiting for the storm to pass the way most struggling automakers do, Mercedes did the opposite. They're launching more new cars in the next 18 months than most car companies release in an entire decade. 30 new or heavily updated models by the end of 2027. 16 of them landing in this single year alone. 7 of those reveals crammed into just 3 months. This is not a cautious correction. This is a full sprint, right into the middle of the most uncertain car market in a generation. By the end of this video, you are going to understand exactly why Mercedes is betting everything on speed, why this decision is either the smartest move the brand has made in 20 years or the riskiest gamble in its entire history, and what it actually means for anyone who drives, buys, or simply cares about cars. Let's start with the number that started all of this, 9%. That is how much Mercedes-Benz global sales dropped in 2025, falling to around 1.8 million vehicles worldwide. For a brand of this size, that is not a small dip you can explain away with a bad quarter. That is a company-wide alarm bell. China, once the golden goose for German luxury brands, has become brutally competitive, with domestic electric vehicle makers undercutting European rivals on price, technology, and even prestige. The United States market has been squeezed by tariffs and shifting consumer confidence. Europe itself is caught between rising costs, tightening emissions rules, and buyers who are increasingly unsure whether they even want an electric car right now. Put all of that together, and you get a company standing at a crossroads, watching its market share erode in almost every direction at once. Now, when a legacy brand faces numbers like this, there are usually 2 paths. Path 1 is retreat, cut costs, delay launches, protect margins, wait for the storm to pass, and hope the core lineup is strong enough to hold the line. That is the conservative defensive playbook, and honestly, it is the one most analysts expected Mercedes to follow. Path 2 is the opposite. Go on the offensive. Flood the market with new product, force customers to pay attention, and essentially dare the competition to keep up. Mercedes chose Path 2. They didn't just choose it quietly. They called it, in their own words, the biggest product and technology launch program in the company's 140-year history. Not the biggest in a decade. Not the biggest since the merger with Chrysler. The biggest in 140 years. That is the kind of statement that either becomes a legendary turning point or a cautionary tale taught in business schools for the next 20 years. So what does this actually look like in practice? Mercedes has broken its 2026 rollout into 3 tiers. And the way they've split it tells you everything about where their priorities really sit. The first tier is entry-level, the more accessible end of the lineup. The cars meant to pull younger or first-time luxury buyers into the brand. That segment is getting the least attention, just a handful of new releases. The second tier is what Mercedes calls core, the bread-and-butter models, the C-Class, the GLC, the vehicles that make up the bulk of daily sales volume around the world. That tier is getting a healthy refresh, new combustion variants alongside new electric versions. But the third tier, the one getting the most new models by a wide margin, is what Mercedes calls top end, the flagship territory, the S-Class, the Maybach lineup, the high-performance AMG variants. 12 new reveals in this segment alone through the end of 2027, compared to just 3 in the entry-level category over the same period. Think about what that tells you. When a company is losing sales and searching for where to fight back, the instinct might be to protect the affordable, high-volume segment that keeps the lights on. Mercedes did the opposite. They are pouring their resources into the top of the market, the most expensive, most profitable, most exclusive vehicles they make. And the reasoning behind that decision is actually pretty sharp once you look at the data. In 2025, it was the top-end segment that held up the best. While entry-level and core models saw steeper declines, the flagship and performance vehicles proved far more resilient. Buyers at that level are less sensitive to interest rates, less rattled by economic uncertainty, and more loyal to the brand experience itself. In other words, Mercedes looked at where the bleeding was lightest and decided that is exactly where they should double down, because those buyers are still spending, and those vehicles carry margins that can genuinely move the needle on the balance sheet. But here is where the story gets even more interesting, because buried inside this avalanche of new vehicles is a strategic reversal that almost nobody predicted just a few years ago. For most of the past decade, Mercedes, like nearly every major automaker, was racing toward an electric future. Billions of dollars poured into battery development, dedicated electric platforms, and a public commitment to phasing out combustion engines as quickly as the market would allow. Executives stood on stages promising an electrified tomorrow. Entire product lines were rebuilt from the ground up around electric architecture. And now, in 2026, the majority of the new vehicles in this massive launch wave are combustion-powered, not electric. Combustion. Gasoline engines, updated, refined, and in some cases more powerful than ever, are once again at the center of Mercedes' strategy. This is the real shock buried inside all those flashy headlines about record-breaking launch numbers. It is not just that Mercedes is releasing more cars than ever. It is that Mercedes is quietly admitting the all-electric transition moved faster on paper than it did in the real world. Consumer demand for electric vehicles, especially at the luxury end, has been softer and slower than the industry expected just a few years ago. Charging infrastructure in many markets still lags behind what buyers actually need for long. Trips. Battery costs, while falling, have not fallen fast enough to make electric vehicles as attractively priced as leadership once promised. And perhaps most tellingly, plenty of loyal Mercedes buyers, the exact people paying for those profitable top-end models, still want the sound, the feel, and the familiarity of a combustion engine under the hood, especially in performance-oriented vehicles wearing the AMG badge. Speaking of AMG, this is where the story escalates from bold to almost reckless, depending on how you want to look at it. While the core Mercedes brand plans 30 new models by the end of 2027, the AMG Performance Division is moving even faster relative to its size. A senior Mercedes-Benz board member overseeing production, quality, and supply chain, someone who previously ran the Performance Division himself, revealed in an interview that AMG alone plans to launch more than 27 new cars in the next 36 months. Read that again. 27 vehicles from a single performance sub-brand in 3 years. That averages out to more than one new AMG model rolling out every single month for the next 3 years straight. For context, AMG sold around 50,000 units in the United States last year and about 140,000 units globally. The division's stated goal is to reach 200,000 units a year by the end of the decade. That is not a modest growth target. That is an aggressive, almost audacious expansion plan for a brand built on exclusivity and performance. And just like the parent company, AMG is not putting all of its chips on electric power either. The division has been explicit that it will keep developing both electric and combustion vehicles simultaneously, giving customers the choice rather than forcing them down one technological path. This matters because AMG's entire identity has always been built around visceral, emotional performance, the roar of a V8, the physical sensation of a twin-turbo engine building. Boost, the kind of driving experience that a lot of enthusiasts have argued electric powertrains, for all their instant torque and blistering acceleration, still cannot fully replicate. By keeping combustion alive and well inside AMG, Mercedes is protecting the emotional core of its highest performance brand, even while continuing to invest in electric technology elsewhere in the lineup. Now let's talk about the actual vehicles, because this is where the announcement stops being abstract strategy talk and starts becoming something you can actually picture in your driveway. The revised 2027 S-Class has already broken cover, Mercedes' flagship sedan getting its most significant update in years, and it is safe to assume that AMG and Maybach versions of that same platform are coming right behind it, based on the timeline Mercedes has laid out. The GLS, the brand's largest and most luxurious SUV, is set for an update this year as well, again followed by a faster AMG variant and an ultra-luxurious Maybach edition for buyers who want the absolute peak of what Mercedes can build. There's also a G-Class Cabriolet, teased at the end of last year, continuing the wild expansion of the G-Wagon family into new and unexpected directions. And interestingly, spy shots have already caught a smaller baby G-Class, undergoing testing with electric power, suggesting Mercedes wants to bring that iconic boxy design language down into a more accessible price bracket, while still keeping the option of an electric powertrain on the table. On the electric side of the ledger, the story is not one of total retreat. The all-electric GLC has been generating what Mercedes describes as demand significantly exceeding expectations, a genuine bright spot in an otherwise challenging electric lineup. The next generation GLA, one of Mercedes' most important vehicles from a pure volume standpoint, is expected to launch as a full electric model first, with mild hybrid combustion versions. Following shortly after, a range Mercedes says can travel up to roughly 650 kilometers, or around 408 miles on a single charge. That is a genuinely competitive number in the current electric vehicle landscape. Meanwhile, the CLA has already become something of a surprise success story for the brand, with strong order intake helping offset weaker performance elsewhere. But at the same time, two existing electric models, the EQE sedan and the EQE SUV, are expected to be discontinued this year, quietly phased out after failing to generate the sales volume Mercedes originally hoped for. That detail alone tells you a lot. This is not a company abandoning electric vehicles altogether. This is a company being far more selective about which electric models deserve continued investment and which ones simply were not resonating with buyers. There's also a technology angle to this story that deserves attention, because Mercedes is not just changing what kind of engines go under the hood, they are changing what happens inside the cabin too. The company recently announced a multi-year partnership with an artificial intelligence company called Liquid AI, aimed at scaling embedded on device intelligence across Mercedes models equipped with its newer generation infotainment systems in North America. In plain language, Mercedes wants its cars to get smarter without necessarily depending on a constant cloud connection, processing more intelligence directly inside the vehicle itself. This fits into a broader pattern across the industry, where the car is increasingly seen as a rolling computer as much as a mechanical machine, and where software and onboard intelligence are becoming just as important to the ownership experience as horsepower and handling ever were. So why does any of this actually matter to you, whether you are a diehard Mercedes fan, a curious car enthusiast, or someone who has never owned a European luxury vehicle in your life? It matters, because Mercedes is essentially running a live experiment that the entire auto industry is watching very closely. For years, the prevailing wisdom among nearly every major automaker was that the future was electric, full stop, and that combustion engines were on borrowed time, destined to be phased out as quickly as regulations and technology would allow. Mercedes just publicly demonstrated, through real product decisions backed by real investment, that the transition is messy, far slower and far less linear than that narrative suggested. When one of the most respected and historically significant luxury automakers on the planet dedicates the majority of its biggest product launch in 140 years to combustion-powered vehicles, that sends a signal far beyond Stuttgart. It tells competitors, suppliers, and investors that consumer demand has not caught up with the industry's original electric timeline, and that flexibility, not rigid commitment to one technology, may be the smarter path forward for the next several years. It also raises a genuinely fascinating question about risk. Mercedes is spending an enormous amount of money, engineering talent, and manufacturing capacity on this launch blitz at precisely the moment when its sales are declining, and the broader market is more uncertain than it has been in years. Tariffs continue to complicate international trade in the automotive sector. Competition from Chinese electric vehicle makers keeps intensifying, with companies like BYD and others expanding aggressively into markets Mercedes has traditionally dominated. And consumer confidence, particularly around big-ticket purchases like a new luxury vehicle, remains fragile in several of Mercedes' most important markets. Betting big during uncertainty is either the move of a company with genuine long-term conviction in its own product, or it is the move of a company that feels it has no other realistic choice left. Standing still, after all, guarantees continued decline. Moving aggressively, at least, gives Mercedes a fighting chance to reset the narrative, capture headlines, and pull hesitant buyers back into showrooms with a wave of genuinely new and updated vehicles they have never seen before. There's also a competitive angle here that cannot be ignored. Mercedes is not the only German luxury brand rethinking its product strategy in real time. Rival manufacturers are also adjusting their own combustion and electric mixes, prioritizing powertrain variety rather than committing entirely to one path, which suggests this is not an isolated Mercedes decision, but part of a broader, industry-wide recalibration. The initial rush toward all-electric, everything appears to be giving way to a more pragmatic, hedge-your-bets approach across the entire luxury segment. Nobody wants to be caught flat-footed if electric demand accelerates again, but nobody wants to abandon a combustion customer base that is still very much alive, and in Mercedes' case, apparently still growing in certain segments. Let's also talk numbers for a moment, because the sales figures underneath this entire story paint a more nuanced picture than a single headline could ever capture. Despite that overall 9% decline in 2025, Mercedes-Benz Group still moved roughly 2.16 million cars and vans worldwide for the year, which is still an enormous figure by any reasonable standard. The fourth quarter of that year was actually the strongest quarter of the entire 12 months, with over 550,000 vehicles sold, up meaningfully compared to the third quarter. AMG deliveries specifically rose by 7%, even as the broader company struggled, and the G-Class recorded its best ever sales figures in company history. In the United States specifically, deliveries actually ticked up slightly compared to the previous year, even as overall group numbers dipped due to inventory and stock management decisions. So this is not a company in free fall. This is a company experiencing real pressure in specific markets and specific segments, while other pockets of the business, particularly performance vehicles and the flagship G-Class lineup, continue to perform remarkably well. That nuance matters, because it helps explain exactly why Mercedes chose the strategy it did. If every single part of the business were collapsing at once, a massive, expensive 30-model product blitz would look almost irrational, like throwing resources at a sinking ship. But because certain segments, especially the high margin, high loyalty performance, and flagship categories, are proving resilient even during a broader downturn, the decision to double down specifically in those areas starts to look less like desperation and more like calculated opportunism. Mercedes is essentially saying, we know exactly where our strength lies, and we are going to reinforce that strength as aggressively as possible while the rest of the market sorts itself out around us. Of course, none of this comes without genuine risk, and it would be misleading to present this entire story as some kind of guaranteed masterstroke. Launching 30 new or significantly updated vehicles in roughly 2 years is an enormous logistical undertaking. Every single one of those launches requires massive coordination across manufacturing, supply chains, dealer training, marketing, and quality control. Any misstep, any delayed launch, any quality issue on a flagship vehicle carrying the Mercedes name into a new generation could damage the brand at precisely the moment it can least afford it. There is also the very real question of whether the market can actually absorb this many new vehicles in such a short window without cannibalizing sales between Mercedes' own models. If a customer is choosing between a refreshed GLC and a brand new GLA, both competing for similar budgets and similar buyers, Mercedes risks competing against itself as much as against outside rivals like BMW, Audi, Lexus, or the rapidly rising Chinese luxury brands entering the same space. And then there is the broader economic backdrop that nobody can fully control. Tariff policy, currency fluctuations, interest rates that affect vehicle financing, and shifting consumer sentiment around large discretionary purchases could all shift dramatically between now and the end of 2027, when this entire product cycle is supposed to wrap up. Mercedes is essentially committing to a multi-year strategy in a macroeconomic environment that has proven, time and time again in recent years, to be extremely difficult to predict even a few months out, let alone a few years. That uncertainty is precisely what makes this such a genuine gamble rather than a safe, obvious decision. If the broader economy holds steady or improves, and if Mercedes executes this launch program with the precision it is promising, this could go down as the moment the brand successfully reinvented itself for a new era, blending combustion heritage with selective electric innovation in a way that satisfies both loyal traditionalists and forward-looking buyers. If the execution stumbles, or if the economic environment worsens significantly, this could instead become a cautionary example of a legacy brand overextending itself at precisely the wrong moment. What makes this whole situation genuinely compelling to watch, though, is how directly it challenges the narrative that dominated the automotive conversation for the better part of the last decade. We were told, repeatedly and confidently, that the future was electric and that the internal combustion engine was essentially a dying technology on a fixed countdown clock. Mercedes, a brand with the resources, the engineering talent, and the market research capabilities to know exactly where consumer demand actually stands right now, just placed a massive public, multi-billion-dollar bet that combustion engines still have a significant and profitable role to play, at least for the next several years. That is not a small statement. That is one of the most influential luxury automakers on Earth, essentially recalibrating the entire industry's timeline in real time, right in front of everyone. So where does this leave things? Mercedes is entering the most product-dense period in its 140-year history at exactly the moment its sales are under the most pressure they have faced in years. They are prioritizing their most profitable, most resilient segment, the flagship and performance end of the lineup, while trimming back underperforming electric models that failed to find an audience. They are pursuing combustion and electric power simultaneously rather than committing fully to either path, giving customers genuine choice rather than forcing a single technological direction on them. And through AMG specifically, they are pushing an almost unprecedented pace of new performance vehicle launches, averaging more than one new model every single month for the next 3 years. Whether this turns out to be the boldest and smartest strategic pivot in modern Mercedes history, or an overextended gamble that stretched the brand too thin during an already turbulent period, is genuinely something nobody can say for certain yet. But one thing is completely clear. Mercedes is not sitting back and hoping the market corrects itself. They are forcing the issue, flooding showrooms with new product, and daring both their competitors and their own customers to keep up with a pace of change the brand has never attempted before in its entire history. The next 18 months are going to tell us whether that gamble pays off and whether other legacy automakers watching from the sidelines follow Mercedes down the exact same road. Let's put this into some historical perspective, because Mercedes has actually faced existential feeling moments before, and looking at how those played out gives us a useful lens for judging this current gamble. Back in the early 2000s, the merger with Chrysler nearly derailed the brand's reputation for engineering excellence, dragging quality perception down at a time when Mercedes had built its identity on reliability and precision. The company eventually walked away from that partnership, rebuilt its quality reputation from the ground up over the better part of a decade, and emerged stronger, more focused, and more disciplined about protecting its core identity. Then came the diesel emissions controversy that rocked the entire German auto industry, damaging trust in combustion technology broadly and accelerating the initial push toward electrification across every major manufacturer, Mercedes included. Each time, the brand faced a moment where its long-term direction genuinely seemed uncertain, and each time, it eventually found a way to recalibrate rather than collapse. This history matters because it suggests Mercedes has institutional experience navigating exactly this kind of high-stakes strategic pivot, even if the specific pressures this time, tariffs, Chinese competition, and softer than expected electric demand, look different from anything the company has dealt with before. It is also worth asking what this means for the everyday car buyer, not just for industry analysts watching from a distance. If you have been holding off on a Mercedes purchase because you were unsure whether to go electric or stick with a traditional engine, this announcement is effectively Mercedes telling you that you will have genuine choice across nearly every segment for the next few years, rather than being pushed exclusively toward one powertrain or another. If you are someone who loves the sound and feel of a proper AMG V8, the fact that the performance division is explicitly keeping combustion alive, even while expanding its electric offerings elsewhere, should be reassuring news rather than a footnote. And if you are someone who has been eyeing the electric side of the Mercedes lineup specifically, the fact that models like the electric GLC are seeing demand exceed expectations, while underperforming models like the EQE are being phased out, suggests the electric lineup that remains is likely to be sharper, more competitive, and more carefully targeted at what buyers actually want, rather than spread thin across too many underwhelming options. There's a broader lesson buried in this too, one that extends well beyond Mercedes and into how we should think about the entire industry's relationship with electrification going forward. For years, the conversation around electric vehicles was framed almost as an inevitability, a straight-line march toward a fully electric future with no meaningful detours along the way. What Mercedes is demonstrating right now, through real product decisions backed by real financial commitment rather than just public statements, is that the path forward is going to be far more complicated, far more regional, and far more dependent on actual consumer behavior than that original narrative ever accounted for. Different markets are adopting electric vehicles at wildly different speeds. Charging infrastructure varies enormously from country to country. Government incentives shift unpredictably with changing political administrations. And ultimately, no matter how much investment goes into battery technology, customers are still the ones who decide what they are willing to spend their money on. And right now, a meaningful portion of Mercedes' most loyal and most profitable customers are telling the company, through their actual purchasing decisions, that they still want the option of a traditional engine. None of this means the electric transition is dead or reversing course. Mercedes is still investing heavily in electric platforms, expanding its charging network, and developing genuinely competitive electric models like the new GLC and GLA that are performing well in the market. What this really represents is a maturing of the industry's approach, moving away from rigid, one-size-fits-all mandates, and toward a more flexible strategy that meets customers where they actually are rather than where the industry originally assumed they would be by now. That flexibility, more than any single new model or engine announcement, might end up being the most important takeaway from everything Mercedes has revealed about its plans for the next 2 years. As this rollout continues through the rest of this year and into next, keep an eye on a few signals that will tell you whether this gamble is actually working. Watch how quickly Mercedes can turn these new launches into real sales momentum, particularly in China and the United States, the two markets putting the most pressure on the brand right now. Watch whether the combustion-heavy strategy genuinely resonates with buyers or turns out to be a temporary bridge before electric demand catches back up. And watch what Mercedes' German rivals do in response. Because if this aggressive, product-dense strategy pays off, do not be surprised to see the rest of the luxury automotive world scrambling to match the pace Mercedes has just set. Either way, this stretch is going to be one of the most closely watched periods in modern automotive history, and Mercedes, whether by necessity or by design, has placed itself directly at the center of it.